Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the 4-hour time frame with the bearish scenario, where we are looking for a 3-wave corrective structure to the upside and then a continuation to the downside to take out the low at 49k, moving closer to the mid 40s. In this case, we have a finished 3-wave corrective structure, an ABC to the upside in a wave W, where your wave C hit the most common target for wave C, which is the 1-to-1 trend-based fib extension, taken from the low to the high of A to the low of your wave B. We are then looking for this wave X to finish after a 3-wave corrective structure, and it is actually good to see price moving towards the downside and at least touching the 0.382 Fibonacci taken from the low to the high of W, because this low over here and this low over here did not touch the 0.382, and for any structure it is very rare to not at least retrace to the 0.382. For a WXY, for an ABC, for a 1, 2, 3, your minimum target would at least be the 0.382. This one is now touched, so that is good to see. Your common target for your wave X is that 382 to the 886, 57.5 to 50.6k, but generally the most common retracement area is the 05 to the 786, 55.9 to 51.9k. When wave X is finished, we are looking for a wave Y towards the upside. The minimum target for a wave Y would be the 0.618 trend-based fib extension taken from the low to the high of W to the low of your wave X. Taking the current low on the chart here, your target would be 64.6k. If price is going to move to lower levels, your minimum target for Y will also move towards the downside. Now, a wave Y can be one of 3 structures. It can be a zigzag to the upside, it can be a flat structure to the upside, or it can become a bigger triangle, but we have to wait and see what kind of structure we get once we start to move towards the upside locally. The bullish scenario on the 4-hour time frame is an impulse to the upside in a 1, 2, and 3 continuation. The problem in this case is that your wave 1 looks a lot better as a 3-wave structure instead of a 5-wave structure. And for an impulse, preferably we count this as a 5-wave move, which makes it difficult to give higher probabilities to a bullish count. The only way we can really start with a 3-wave structure in a wave 1 of an impulsive move would be to create a bigger diagonal where you have a zigzag in 1, then in 2, 3, 4, 5. But it is way too early to start talking about diagonals. Preferably you have to wait for a wave 4 to be in, and we're far away from creating a wave 4, as this would only then be a wave 2. But your target area, most commonly for a wave 2, would be also again that 05 to 786, the same as your wave X. If we then zoom in to this structure here towards the downside, then the probabilities remain higher. We are looking for a 3-wave corrective structure and then a continuation towards the upside, taking out the high of 63k, at least as long as the minimum target for a wave Y on the 4-hour time frame is above that level. Now, what you see on the chart here is a double zigzag scenario, a WXY posted by KG in the gold Discord, W, ABC to the downside, a 3-wave X, and then a wave Y to the downside here. This is your most common target for Y, which is a target area we have now hit. The most common target for your wave C in the final ABC to the downside is actually a little bit lower, 55.7k to 54.8k, in confluence with the support box just below here, sitting between 54.6k and 55.2k. I do realize that in this double zigzag scenario, wave X did retrace to the 0.7 Fibonacci taken from the start to the end of your wave W, which does significantly lower the probabilities for a double zigzag WXY, but it is not an invalidation. So therefore, it is still good to keep an eye on this scenario, but the support area for pretty much every 3-wave corrective structure over here is actually the same, because even if we would look for a zigzag in W, a flat over here in a wave X, and then another Y, you would still look for price to find support in a similar area. Here for a wave B, it would be 56.7 to 56.1k. So generally what we are looking for is price to find support in this area, 56.7k to 53.5k. Pretty much all of the three-wave corrective structures we can count here and somewhere, or at least find support somewhere in this box. The more bearish scenarios, where we are looking for impulsive continuation to the downside and price to take out this low immediately, have lower probabilities. First of all, this one has lower probabilities, wave 1, 2 and the wave 3, because your wave 2 is 8 times longer in time compared to your wave 1. Wave B in this flat ABC retraced to the 1.618, which is rare, and this is a running flat because C did not move above A, which is incredibly rare, never preferred unless any other scenario fails, which it hasn't. Your second most bearish scenario would be to move the numbers a little bit and you have a wave 1, 2, look for a 3 towards the downside. Reason this has lower probabilities is because your wave 4 here is incredibly short compared to your wave 2, not even reaching the 0.382 fib time, significantly lowers the probabilities. This structure down is an impulse in a 1, 2, 3, 4, 5, higher probabilities. This is a three-wave structure, and that this range over here is a lower degree wave 4 in a 1, 2, 1, 2, 3, 4, 5, 4, and then a wave 5 in a bigger A, B, and then a wave C. So if we then look at the probabilities of the different scenarios, then on the 4-hour time frame, the probabilities are at the moment highest for the bearish scenario, where we are looking for a wave W, X, and a wave Y towards the upside, compared to a bullish scenario where we are looking for impulsive continuation in a 1, 2, and a wave 3. And on the 1-hour time frame, the probabilities of this range over here are also bullish because the probabilities are higher. We are looking at a three-wave corrective structure to the downside, and we are looking for this structure to end somewhere between 56.7k and 53.5k. Look for some signs of strength, proof of support. We have some, of course, additional support just below. Keep an eye on it, and then we want to see price move towards the upside. On the number 2 spot, we then have the bearish scenarios, the impulsive moves towards the downside, where we then take this low directly. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.